Let's take a look at the daily chart for Skills. And hello, or as we say here in Japan, Moshi Moshi. That's not actually how we say it here, guys. Looks like we're getting out of Harakiri territory and back into some semblance of growth on the back of really solid earnings report last week and a bunch of great news too. Andrew Paradise, Skills CEO, just put through a massive buy order, and this means he knows things are probably about to take off. So today, we're going to take a look at all those reasons, and you guessed it, we're going to put Skills up on the Trey scoreboard where we look at the growth potential, the current valuation, the management, memeability, and since I live in Japan, the stock market is open while I sleep, and I love sleep, score. And I'm also going to share my price targets and more about what I've been doing in Skills with my own portfolio too. And if you're new here, welcome to the channel. My name's Trey McKee, and here at Benevolent Investors, we aim to grow our portfolios, or in the case of my biggest loser, Skills, rebuild, and then grow our portfolios, all while making it rain on our friends and families and loved ones and communities. So here it is, CEO Andrew Paradise's Form 4, which executives need to file with the IRS when they're making moves on their own stock. It was filed hours ago and shows that he bought almost $5 million worth of shares in Skills at an average price of $11.50. These aren't options he got for free, he actually paid for them with his own money and now owns them directly. And generally speaking, this is a great sign if you're interested for the long term. Seeing management's confidence growing in their own projects is super reassuring, and it seems like the more Skills grows, the more Paradise's smile and confidence grows on camera too. So what's behind all this confidence? Let's take a look at the most recent earnings numbers, and then we'll get into more of the broader business strategies. Starting out with their consolidated statement of operations, where we see top line growth on a tear up more than 70% year over year, which is more than a lot of people were expecting after work from home started to ease off and people started getting back oot and a boot, as we say back in my motherland of Canada. Real quick, here's a graphical representation of their longer term revenue growth from Hypercharts. I'll be sharing a few more Hypercharts, and if you find these helpful, please check them out using the affiliate link in the description. But revenue are the blue bars, and that's what we like to see growing in young companies like this. The savvier and more experienced of you are probably wondering why the operating income bars in the red here are getting bigger and bigger despite rising revenues. But hold your horses there, Michael Schumacher. We're getting into that, okay? Gliding through the expenses, we see that R&D, sales and marketing, and G&A have also grown disproportionately large and are outpacing our revenue growth. But the change in fair value of common stock warrant liabilities slides in to save the day, bringing us back into, I believe, Skills' first ever non-negative quarterly net income. And though we don't often see this kind of weirdness on some of our more, solid and slower moving plays, SPACs and newer companies, especially those who've gotten their share prices decimated, like Skills has in the last year, sometimes will experience this. Man, this chart hurts to look at. And my condolences if you got into the stock somewhere up in that peak. And yeah, in case you're wondering, a small bit of my holdings came from somewhere up there too. I guess that's why they call me Diamond Hands McKee. And speaking of high growth stocks, slide down to the bottom here and check out the share dilution going on too. Looks like Skills has learned a thing or two from our man JPow, who's been in the habit of doing a fair bit of printing. Here's another look at Skills share dilution going on, and thankfully we can see that things seem to be slowing down and hopefully will improve going forward after all these acquisitions and transitions start to kick in and take effect in the coming quarters. But if you're a long-term investor and you've been in Skills because you see the potential for their gaming platforms to develop into something industry-changing and massively profitable like I do, I think you'll be interested to see that while the price has been hammered and the gains are starting to improve, both the next 12 months and the trailing 12-month multiples are way more appealing than they were a couple of quarters back. If you sniped in at all-time lows lately, you're probably pretty happy with yourself at the moment, but EV to revenue figures aren't looking too shabby right now. EV EBITDA are still negative, but when your market cap has halved and revenues have doubled, things start to look much more appealing whether you're a value investor or a short play meme stock maestro. So with that, at the risk of doing this completely all out of order, I give Skills a current valuation Trey score of 7 out of 10. I know it's probably still too early for a lot of the more conservative investors watching, but I'm really excited by the future growth and a lot of the management moves, which I'll get into in a minute to help you understand this 7 out of 10 a bit more. I'll also share my price targets too. And real quickly, speaking of the Trey score, let me know if you have any thoughts on the categories or organization of it in the comments section. With that, let's take a look at the memeability of Skills. I found this little doozy on Twitter where user Squeezy Pig suggests that Skills is 100% shorted and probably about to explode. Now, I know nothing about this user or how this math actually works out because it's quite hard to get your hands on really accurate short interest information for verification. But if this is true, Skills could legit explode in short order. And when news tidbits like this start to spread on Wall Street bets, the memeing begins. So with that on top of all the other sentiment that's always been around this stock, including a lot of the in and out hype associated with whatever moves Cathie Wood over at ARK Invest does as well, I give Skills a memeability trace score of 9 out of 10. Check it out here. We see that ARK has been putting in work to add more skills to their ARK-K fund in recent weeks. I don't personally put too much weight in this, but I guess it is good to see other institutions buying into a stock I like too. And speaking of that, institutional ownership of Skills looks to be around 57%, which is neither alarming nor comforting per se. Next, to get a better idea of where the company's going, let's look into the growth potential in management. I've shared thoroughly in the past couple of videos on Skills, which I'll link at the end of this one, about all of their recent partnerships and acquisitions. But the short-term downside to making boatloads of acquisitions is that they cost a lot of money. Hence the share dilution we saw earlier, but along with that comes staffing and R&D expenses as well. They mentioned here that R&D was up 201% over the prior year period, including stock-based compensation associated with a growing staff. And though these figures look bad at the moment, they're necessary for those juicy long-term growth and gains we all want to see. Next, let's take a look at user acquisition costs in sales and marketing. This is by far Skills' largest expense, but thankfully we're starting to see improving UA or user acquisition costs. And I think next quarter, the cost savings associated with the Aarki acquisition will hopefully start to kick in soon too. They're still spending 110% of their revenues on sales and marketing, though that was an 11% decrease from the prior period. Again, I consider this a good thing, but if we don't start seeing a massive payoff from the Aarki acquisition in the coming 2 quarters or so, I'm going to be really concerned. But thankfully, this did lead to a growth in overall monthly active users, or MAUs, as well as PMAUs, or paid monthly active users as well. Last quarter's dip undoubtedly induced the soiling of many investors' pants, which I think contributed to the stock's collapse in the past couple of months. But this break in the trend is one of the reasons for the share price turnaround lately. The general and administrative portion of the operating expenses showed the largest quarter-over-quarter growth, represented here in the green, and it was up 515% over the prior year period. 31 of this 48 million worked out to be stock-based compensation expenses for their new employees associated with the growing staff. Most of the remainder came down to litigation and administration. And of course, all of these were the reason the EBITDA ended up looking pretty trashy year over year, but that's what happens when you're acquiring complementary companies and boosting staff counts. Another very notable staff move was adding Vatsal Bhardwaj to their roster as Chief Product Officer. He came over from Amazon, where he served as their General Manager and Director of Game Tech for Amazon Web Services, and previously as Head of Product for several groups at Facebook. On the contrary, while we're seeing a shopping spree for new acquisitions and talent, management's always been pretty good at keeping the balance sheet looking really solid. Cash and equivalents sit at a cute 540 million, down for reasons mentioned earlier from previous quarters, but still easily dwarfing the entire total liabilities portion of the balance sheet, giving us a massive negative net debt of 540 million, which shows us that while a lot of headliner figures still have more conservative investors fleeing for the hills, Skills isn't actually very risky as far as being able to cover their debts. And I also wanted to mention the fact that Fast Company has recognized Skills in their top 50 best workplaces for innovators as well. And so with that, I give Skills a management tray score, a solid 8 out of 10. Though I doubted Paradise more in the early phases of the business, a lot of these aggressive growth moves on top of the clean financials are comforting. Now, the challenge comes in whether or not all the share dilution used to fund all of this growth will actually pay off in the long term. So let's move into the growth potential category. Check it out, monthly active users hitting all-time highs, and I think this trend is bound to continue. We've covered the new Big Buck Hunter Marksman game already on the channel when we saw it quickly rise to number 1 in the sports category on the App Store. Marksman boosted monthly active users by 11% on a year-over-year basis and 25% sequentially, thanks to its super large and loyal fan base. I think this is like the 13th iteration of Big Buck Hunter in the series, so getting access to the title effectively gets Skillz in front of many millions of users. And the strategic partnership with German Exit Games is also set to allow Skillz to offer a much more broad selection of games. In the past, most of the games were basically just a recording of you versus a recording of another person playing like a really elementary kind of basic puzzle game. But with this Exit Games deal, Skillz should be able to step up into the realm of professional esports because Exit's technologies power asynchronous game publishers like EA, Square Enix, and Ubisoft. And this tech allows Skillz to be able to run large multiplayer games without any lag, opening up the library potential to effectively the whole rest of gamingdom. So you want growth? Here it is. They should be introducing live online racing games, fighting games, first-person shooters, and I would imagine eventually MMOs too. And most of the major AAA game publishers already operate in these categories. So before we know it, Skillz could eventually be on the same level as a lot of these heavy hitters. They also announced in August the addition of Trivia Crack, the most popular trivia game in history, which is available in 180 countries, 34 languages, and has 150 million annual active users. And y'all wanted some growth to look forward to. And then there's the NFL partnership where they're going to be putting together one or more games to present to the NFL's audience and hopefully boost retention. And if you didn't already know, NFL viewership this year is up double digits year over year, with Sunday Night Football breaking 20 million viewers a week. Not sure how much the NFL is going to be pushing Skillz games like on Sunday afternoon every week or something like that when these games are done, but hitting home with even a fraction of these viewers could mean really big things for Skillz. So with that, I give Skillz a growth potential Trey score, and this takes into account not only the share price growth, but also the company growing as a whole of 9 out of 10. Finally, you know your boy loves me some sleep, and now that daylight savings is done and the stock market opens at freaking 11:30 p.m. here in Japan, Skillz gets a since I live in Japan and the stock market is open while I sleep and I love sleep score of 5 out of 10. You've seen the stock price chart, so you know what I'm thinking. But I think as the company grows and becomes more established, volatility should settle down significantly while retaining hopefully a nice memeability score. So if you couldn't tell already, I'm pretty excited about the next steps for Skillz. My current cost basis is around 18-ish bucks, but I think I'm going to be buying heavy with this improved traction we're seeing lately. My short to mid-term price target is around 20 to 22 bucks, with a longer-term price target of low to mid-30s. But if we see some meme action, things could change really quickly, and we've seen that before already with Skillz. So before I show you the Trey scoreboard comparing this score to our other stocks, keep in mind that this is all for laughs, and it's obscenely subjective as well. Each category probably has different weight for your investing needs and goals too. For some people, memeability probably is like totally not a factor. And also, if you wanted to learn more about all those deals I was mentioning earlier, check out this video linked up here. And here we are with Skillz taking a first place over yesterday's Dropbox analysis and last week's Nokia analysis with a score of 38 out of 50 trays. Love you guys and stay generous.